evening, peoples. It is April 1st, around midnight. I'm still in Asia, so it's already my next day. It's already April 3rd here. An apology. I had some surgery and it didn't go well initially. I had two further surgeries to fix sort of the first surgery that created some further problems. So I really was out of pocket, unable to do any videos, and I'm sort of back on the mend at home. So I want to catch up in a lot of ways. Number one, before I jump in, part of this thing is just a simple update on Curve and their announcement of a distribution for TSLP, their Tesla equivalent of YieldMax, their income fund centered around Tesla. So let me just tell you what that was. So on April 1st, they declared ex-dividend was April 2 and pay date will be April 3. So it was a 55-cent distribution, down from the 70 cent distribution. And you can see here all these reds because every time something is lower than the previous situation, I make the price red. If it goes up, I make it green, right? So even though they move kind of like a week one, week two, week three, similar to YieldMax's groups, they pay monthly. So does YieldMax on most of their hardcore income funds. Some of them like Ulti and obviously YieldMax and YieldMag have gone to weekly, and some of the new ones are weekly. But the whole point now, I want to spend the rest of the time just talking about the markets. Okay, I didn't prepare a lot, but I wanted to give you this is very critical. So as you guys know, I sort of made all my retirement money and I retired in the decade of the 2000s after working in a high tech, one of the top four technical firms in the whole late 90s into 2000 run up, all the dot coms, all of that. I saw that bust. I sort of, in my personal life, I went through a divorce. I was in my 50s and I said, how much longer am I going to work? Do I want to look since I didn't have any children of my own? I thought, I'm going to go to Asia or South America or even Panama. I'm going to retire in a number of years. So, how can I grow my 401k? How can I grow my wealth during this whole next decade as a single divorced person having to still pay alimony? How can I build my wealth? So I got very aggressive. I discovered precious metals, began to understand the commodity cycle, because a lot of people were like, oh no, the dot coms are going to come back. So I could sort of see the NASDAQ in this next, you know, 2001 through 2002 losing 50%. Well, it went down like 82% from the peak in 2000 to some amount in early 2002. So it was very ugly. I'm not sure we're destined for that right at this time, but one thing I can tell you, the markets are indicating we're very close to a top. I'd say a 95% that we've topped in the NASDAQ, in the MAG 7, and a lot of the S&P. There's probably a 5% chance that we haven't topped and that we go on to a little bit higher, but then we'll top and the stuff that I'm going to talk to you about will come into play. So the reason I talk about my background here is I think I'm a little more credible than somebody out here just reporting to you, what did YieldMax do this week? What's their estimate? I'm coming to you with 40 plus years in the market, 40 years of doing options, various trading tech, always at the most someday trades, but a lot of swing trades, a lot of just figuring out what sector is going to be good for, say, the next 6 months or the next 18 months, and deploying monies into those and reaping the rewards. Unfortunately, I don't see these income funds that are tied to the Nasdaq, to the S&P, to the Russell doing very well over the next several years and a half a decade at least. Now, if you're a young person in your 20s or even 30s and you plan to work for 30 years, then just DCA invest. There's nothing wrong with looking at the S&P 500. But if you guys are in your late 40s, early 50s, and you want to build income and you want to grow it, be careful at what you do with traditional high yield income funds. Okay. The only thing I would be in is on something I'm still mixed on where I see Bitcoin going. If anything, I'm still positive BTC over the long run. But remember, BTC has been trading a lot like the NASDAQ. I think there's a very good chance we see 74 before we see 90. Okay. It doesn't mean we don't go down to 74, we don't bottom there, hang around and have another run up to 125. But just know what you're doing. If you're out there buying Misty and you're chasing it, and I see so many people writing in various forums saying, hey, if Misty drops another dollar, margin's going to hit me. Well, first off, if you're doing HELOCs on your homes and you're doing margin when we're obviously now in a bear market, it's very dangerous, guys. You're over leveraged. You're not going to be sleeping. Been there, done that. I was in the 2000, 2007, 2008 when I made a lot of money from 2001 up into late 2007 just playing metals and miners a lot with options, with stocks. And sometimes I got over leveraged. I was like, oh, this is going to do great. And I would have a 250,000 up day in my portfolio. Then the next day I'd be down 190,000. And, I was working for back then, which I thought was, fantastic money, a 300,000 annualized salary. It really wasn't a salary, it was commissions plus a base, but that was my target income for several and many years. But when my market investments started, which got up to several million, my monthly or daily swings sometimes would be a couple 100,000. That's when you start not sleeping. I'm jumping up and looking at the futures. I'm supposed to be on a conference call. So I know what over leverage is and I know how not to do that. And I know these income funds can be, there's a lot of adrenaline. You guys chase it, but as I've said many times in my videos, if you think you can go out there and just have a Misty or a Coney or something, BTC oriented, and you project out, I'm going to get 100% yield a year. And, even if it goes down 5 or 10%, that's 80 or 90, and I'm going to grow my money crazy for 10 years. It doesn't work like that, guys. It just simply, look, I'll give you another fact. Most people don't really. If I told you over the last 25 years, okay, compounded with any dividend, who performed better? The S&P 500, if you went out and bought an S&P 500, collected the small dividend they paid, reinvested that along with that fund over 25 years, and then divide your total return so that you get an annualized return. Most people look at 9.5% on the S&P with the yield reinvested over the last 25 years. Do you know what did better than that? 25 years, I'm talking. Gold. Does gold pay a dividend? No, it does not. So, why is that? Well, when you look at 25 years, number one, you had that massive 2000 run up. That's when I started buying precious metals, mining, gold, the metals themselves around 2001. And I rode that up to, to really 2009. I cashed out because if anybody remembers that Lehman Brothers, that whole 2008 became a train wreck. I got back in mid 29 after it had recovered a lot and rode it into 2011. So my point being, we are in a sector swing, whether it's right now, today, April 1, April 2, or whether it's another 3 or 4 weeks out. I think all you have to do is go look at a chart of the S&P 500 or look at the NASDAQ 100. Okay. We clearly are in a bear market. Like I said, is there some possibility, I rated it at 5%, that we could go on to a new high? But that means it's a 95% probability that it's down. Okay. So we've got one more down before then we get a bounce, right? Let me pop up an S&P 500 for you.
95. Now
So
into some data.
I can talk about that. All right. So here's a chart. You can look at this in many different chart technical analysis, right? Clearly, this is a topping market. So we have an A wave down, and we could have a B wave consist of three: A up, a B down, and a C up, and then a further C down. So it's kind of hard to tell exactly where we are. But I would not rule out seeing the market sooner or later, likely in April, where we visit 510. That's one level. We also could easily revisit this 495. So, guys, all of a sudden, and then you say to yourself, oh, well, then it's back up. No, probably unlikely. If we get down here to say 495 and it's middle, late April, okay, then that completes one leg down. Then we retrace half of that leg, which would probably put us back in this 5,600, okay, and then we go down even further. So this is not steady as you go, all things, there are some levels that things bounce from, but this is what I'm talking about. This isn't just playing your income fund, this is being a swing trader. If you want to swing trade, 510 or 495 and play it for a bounce to 560 on the S&P, that's great, right? But that's what you have to do to eke money out of these things. What are some other alternatives? Well, clearly, gold, as part of the commodity sector, has been signaling to us that there's a lot of fear in the market. Fear is what takes the market down. There's war fear, there's tariff fear. We've got so many. I mean, I love some of the things that Trump and Doge are doing about trying to save the US money, but just look at the temperament on the other side, the Trump derangement syndrome, the people that hate him. I don't care what side you're on, whether you like him or hate him. It just, to me, it's common sense that says we are already at debt levels that we cannot sustain. This 36 trillion with interest rates, we cannot sustain. We can't survive as a nation. So if we don't do Doge, if we don't stop politicians from raiding, the cookie market and taking what they want. I don't care if there's bad guys on the Republican side. Obviously, there's some bad guys on the Dem side. The people that are screaming the loudest about Doge are the people who don't want the gravy train taken away. Again, I'm not trying to give you political views as I'm trying to give you economic views. There isn't anybody out there with any sense of economics that doesn't think first world nations around the world are in big trouble. This is a paper chase to zero, right? It isn't just about the US dollar, it's about all the major currencies. These things, if you look at it, that's why gold is really raising its head. Not necessarily war cycle, it's uncertainty. Okay. And I've seen this. and I've been watching it. I mean, I remember getting excited about GDXY, 6, 8 months ago because I knew where gold's going. I know where gold's going. I don't even think I can name a top anymore. I would have said to you 5 to 7,500. But if we keep going where we're going, we might see $30,000 gold. You don't want to live in a world where gold's $30,000. That means that we're all bankrupt, basically. Okay. I mean, I've been saving physical gold since, the mid 2000s. So I probably have 3/4 of my net worth in physical gold. I sleep well at night, right? So there's no way I'm selling. If we go to five, we go to 6,000. I'm not interested in selling that, and that's an 8x for me. But what I'm trying to share to you about the markets is where are we going over the next year, 2, 5, 7? I can honestly say going into 2030, take that, but more like 2032. So for 5 to 7 years, commodities, foods, grains, metals, will just grow, they will go up tremendously. Why? Because first world governments are going to have to print a lot more money. I don't think we're ever going to shake the inflation, right? And inflation comes really from money printing, and they're going to have to do a lot more of that. So we can default on the debt, but I don't see it just an outright default. I see we hyperinflate it away as much as the US doesn't want hyperinflation. That means the dollar goes down, but so do all paper currencies. So, all I'm saying to you guys that are playing the income fund route, I'm still going to report on that, but you better be thinking about what kind of income funds around commodity oriented, GDXY, although it's not immediately going to produce 100% yield. If I tell you where I know GDX is going to go, it's still a nice fund that people can move into. Nothing wrong with owning some multi or some of these beaten down cryptos, but I'd be looking for 74,000 again. The only way Bitcoin won't go there is if it gets back above 89. It has to get on the next shelf. We're at 85. It had a decent day yesterday. Otherwise, the markets were really flat. So the big test will be right here. Can we move on up? Well, a lot of that with the tariffs, and Trump's going to talk after the market closes, but I think it's still very likely we see 510. April does not project out very well to me. Should I be proven wrong and we go on to a new high up here, whether it's in April or May, that's the 5%. But guys, that doesn't change that we just set a new point for being a top. I don't see a melt up here where we go up another 30 or 50%. But if we did, that signals that we're in an 86% to 90% decline once we've hit that outrageous top. So either way, you guys need to be thinking about what you want to do. So hit me up in the comments section because I'll continue. I built my base on showing income funds, but my extra skill over other people that just report to you on income funds is my knowledge of the markets and cycle study and a lot of other things out there that say what probabilities are, right? I can look at a chart and I can tell you just probabilities of fear and greed and other things that will happen. I mean, if what I see takes shape, and I'm not even talking about a 1929 crash, I'm just talking about something where we see an Nvidia go back to 48 to $50. I mean, it's 108. I almost see that happening regardless, but think about what that does to everything else. So, even Bitcoin seems to be tied to the momentum of the NASDAQ 100. Gold, not so much. And don't think for a minute, there's many times that I've been in the precious metals sector and the markets got smacked hard and the metals and the miners went down. But I can honestly say to you, the miners are so undervalued. They're going to be like a dot com, just printing money with eyeballs. So the idea is we've seen gold run up this year. Gold's up at the end of quarter one, 29%. 10% of it was just in the month of March alone. And silver isn't far behind. Well, I can guarantee you that over the next year or so, that silver will outperform gold. And when it gets moving, it needs to break through 35 and it needs to break through 37. Probably in the next 12 months, we'll see $100 silver. We'll clearly go to the old 50 price high. But think about it, that inflation wise, that's probably $180 on the last $50 high. Especially if you go back and look at the $50 with the Hunt brothers, you know, in 1980s. That's probably well into the 200s if we went to a similar inflation adjusted. So these things have a way of happening, okay? Revert to the mean. I mean, these mining stocks are starting to literally just print money. I mean, I think we may have just about topped. We hit 3150, 3160. Depends on whether you use one of the futures months for price or use the cash price on spot gold. Call it 3150. We may just have topped. Okay. Short term, I think by the end of the year, we see 3,500, 3,600. I think even Goldman and Sachs is saying 4,500 in 2026. And then how high it goes is a function of debt, war, so many other things there. Guys, it's something you have to consider versus where I think the NASDAQ goes, right? And all you got to do is, I'm going to do a lot more. I don't have all my charts together to show you, but I got hundreds and hundreds of charts. I'm going to do a very long video on why metals, why now, why miners, and all. When I say why now and for the next 2 years, 4 years, 6 years, it's the place to be. And then we can figure out strategies if you need income versus you want to swing trade versus you want to buy and hold. You'll see all kinds of things there. Platinum is coming, platinum miners, silver. Both those should tremendously and greatly outperform gold itself. And I expect, I told you, I see 3,500 gold by the end of the year. I see 4,500 gold next year. Okay, guys, that's what I got for you. Sorry for not having more visuals and showing you this, but I have a lot of that. I just need to put it together. Have a great one. Hope you enjoyed this. Hit me up in questions. Um, Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Bye for now.